Okay, welcome back. In today's episode, we're going to talk about Ponzi schemes and the crypto world. We're going to start out with a 1 minute price check. What is the current price of Bitcoin, Ethereum, etc.?
All the things, sure. Well, the current crypto market cap as of right now, it's Monday, May 1st, of course, is $1.2 trillion with just a little extra there. There's another 9 billion and change after that. For the week, it's down just a little bit. It's down about like $20 billion, which may sound like a lot, but in the context of 1.2 trillion is not that big a deal. Bitcoin on the week is up, but just a titch, about 2%. Current price of Bitcoin right now, just hovering around $28,000. And Ethereum is currently a little over $1,800 at $1,828. On the week, it is down less than 1%. So there's actually been a fair amount of movement over the course of the week, but it's just been volatility, and we sort of ended up more or less where we started a week ago.
Okay, so any news in the crypto world as far as current events goes that we should be aware of?
I think so, yeah. Two things. One is that Coinbase currently got served a Wells notice by the SEC a few weeks ago, is now turning around and suing the SEC. And also, sort of in conjunction with this, is thinking about, as announced, they're thinking about leaving the United States, sort of saying like the regulatory environment isn't good enough. They're going to move to Europe, where clear rules are being laid out as we speak. So that is one big piece of news that could affect things. And there's a concern, I think, at least among some pro-crypto tech people, that innovation is potentially being driven out of the United States. We'll see if this really plays out, if this is just a negotiating tactic by Coinbase. The other thing that's big news, certainly everyone knows about this, is the First Republic Bank. It's now the second biggest bank failure of all time. That's right. It passed Silicon Valley Bank, zoomed right by it, and is now number two. We've had three of the four biggest bank failures of all time in the last few months now, with Silicon Valley Bank, First Republic, and Signature Bank. So that stuff does relate to crypto, of course, because it sort of points to at least potentially the failing of the fiat system to some degree, and people maybe losing faith in the banking system as well, which of course is a lot of what Bitcoin is all about.
Okay, so I just want to check that narrative a little bit because, as you know, that anybody who has under $250,000 who in deposits in First Republic or any of those banks that's going under has got that money guaranteed by the federal deposit insurance. And so they're all going to be made whole. In fact, with the buyout that's happening, they're going to be able to go to keep their same account open, go to their same branch. And so that's the beauty of sort of a regulated banking sort of fiat system. So everyone talks about how it's like falling apart. But meanwhile, if you've got some money deposited in FTX, you've got, somebody who's got $3,000, which is their life savings in FTX, and it goes south and goes bankrupt. Well, they lost that $3,000. Very likely that they did. You got $3,000.
What does FTX have to do with this, though? FTX isn't crypto. It's just a financial company like Charles Schwab.
What I'm saying is, like, a lot of people who buy crypto, they buy crypto through an exchange, and there's a fair amount of people who are leaving their money in that exchange, almost like it's a bank. So the big difference is you leave your 50 grand, your $3,000, your 100 grand in any of these exchanges, and they go bankrupt. Goodbye money. You leave your money in First Republic or any of the fiat system banks, and guess what? The government makes you whole. Furthermore, even though First Republic is a huge bank failure, I mean, it is a bank failure. However, like, really what's happening is the government saying, look, those bonds that have gone underwater because interest rates have gone up and you own all these bonds over 3 years or 10 years where you're only getting, 1% or less. And now the interest rates are up 5%, 4%, et cetera. And so all those bonds are worth a lot less money, so much so that if everybody tries to get their money out, you go bankrupt. But as long as everyone doesn't try to get their money out, or as long as the government says, actually, you know what, we're going to give you, we're going to let you hold on to those bonds and we're going to let you cash out in 5 years' time. Like, no one's going to, there's a lot of money moving around.
Why would this be a problem at all? As long as no one wants their money, there'll be no issues. No one go to the bank and get your money. Everything will be fine. That's your point?
It's not as big a deal as the headlines are screaming, is what I'm saying.
Okay. Look, you're also sort of downplaying the idea of the FDIC deposit insurance, right? So meaning like you're making it sound like, well, who's really hurt by this anyway? And the answer is a tremendous amount of people are hurt because a lot of people keep a lot of people and really companies keep a lot more money than $250,000 in a bank account, right? And this was what we saw with Silicon Valley Bank as well, that something like 84% of the money that they were holding was not insured by FDIC because now admittedly that's where a lot of startups were keeping their money, but still it is impractical for companies to have 40 bank accounts with $250,000 each of them or 50 bank accounts or whatever it is. That's not how you can really reasonably do business. And so they don't. The government only has two choices here, right? It's either to back up this stuff and basically insure all amounts past 250 as well, which is what they did with Silicon Valley Bank, or not. They got to pick. And if they don't, that would, in my mind, give people a really good reason not to trust banks as much, right? And if they do it and backstop all banks, essentially, then that will make people feel comfortable in the banking system. You're absolutely right about that. But it will also create certainly tremendous inflation, right? Because a lot more money printing is going to happen, and that money's got to go somewhere, right? That's going to go to asset prices. That's going to be good ultimately for crypto holders, is what I'm trying to say.
Not
I don't know if there's a situation where, why? Why wouldn't it be?
Well, because in the great financial crisis, 2008, 2009, in that era, like there was all this liquidity that was poured into the market, into the banks to backstop them. Otherwise big banks like Citibank might have gone bankrupt as well as the ones that did, like Bear Stearns. But that didn't translate into a lot of liquidity and a lot of loans in the economy. So it's like those banks now had access to this money for their own liquidity if they needed it, but they weren't loaning it out. So it wasn't causing inflation. The velocity of money in the economy did not increase to the extent that we had inflation.
But in 2008, the US government gave the banks that money not as a handout, but to be paid back, correct? What we're talking about is backstopping deposits where the money no longer exists. And so that would be money that would be given to the depositors, the creditors, and never to be paid back. That's a different thing. No?
Well, for the companies, for the banks like that have had, like First Republic, what was the one? Silicon Valley Bank, right? Silicon Valley Bank, which was the big one that just went. So what it was for them, the money is going to go back to the government. They're going to lose that haircut of that percentage of interest rate over the next 3 years or 5 years or 10 years where the bond is not paying.
Oh, I see what you're saying. Right.
But it's not like there's sort of that money's not there. It's there. It's just like
that's fair.
Those bonds at this current market price. And if interest rates go down as many people expect over the next few years, the haircut that the government's going to take is not going to be that large,
So you think like okay, fair enough. That's a good point. So you think if a bunch of banks fail in the next 6 months, which is a reasonable potential outcome right now as we sit, right? We've already had 3 humongous bank failures. There's reports in mainstream media that hundreds of more banks are potentially close to insolvency. What that's going to actually look like or mean, we'll see. But if let's say 50 more banks go insolvent, maybe small ones, but insolvent and go bad over the next 6 months to a year, that's just not a problem. It just doesn't matter.
No,
there's going to be no impact.
I think it's already having an impact, and it is a problem. I don't think crypto is the solution, though, at least as it's currently set up, because you're talking about your bank fails or market volatility. Well, it's a solution for these startup companies who might have $5 million, for example, that they had in Silicon Valley Bank, and so they're well above the insurance threshold.
Yeah.
Is there a solution to then put it into crypto, like an Ethereum or Bitcoin, that is much, much more volatile than the dollar? Yes, the dollar, you can lose some money through inflation. You might lose 5%, you might lose 10% in 1 year. Well, with crypto, you might lose 50% in 1 year.
No question. Yeah, I don't think that would be the solution. I think the solution for these companies would be to buy stable coins with dollars, which a stable coin is something that's pegged 1-to-1 to the dollar, USDC, Tether, there are many others. But those are the 2 biggest. And then it's just dollars or digital dollars, but you can hold them yourself rather than relying on someone else to hold them for you. You can also get yield off them if you want. You can get relatively safe, low yield even, which is more than you can get from banks But you don't have to do that if you don't want to engage in any risky type behaviors at all. You can just hold it and sit on it, and that's it. It's just in your crypto wallet. That's pretty good, right?
How many of these stable coins have gone bankrupt?
How many of these stable coins?
Yeah, wasn't there Luna? Wasn't there something else that was like a stable coin?
UST was the Luna stable coin. That one went to zero. Other ones have, but if we're talking like major stable coins, I think UST is the only example of a major stable coin losing its peg and going to zero.
What was the market cap of that before it went to zero?
I don't know off the top of my head, but I'm going to guess something. It was a lot. It was probably like, $700 million, maybe $1 billion. So, I'm guessing, but something like that.
Was it a significant player in the stablecoin market? Was it one of the more popular stablecoins?
It was. Yeah. It was probably the number 4 stablecoin in the world or something.
So if you're a small business and you've got $5 million, in your startup that you're using for you're getting your company going, if you need to keep it in short-term reserves, why not just keep rolling it into 1 and 3 month treasuries where currently you're getting, 4% plus? And that is basically rock solid rather than putting it in the bank or rather than putting it in a stable coin.
What if you need liquidity though? What if you don't know from week to week or month to month how much you're going to need, or you also, you're not like Apple sitting on $300 billion and everything's fine. You need that money. You need access to it on a regular basis. You can't wait for it if you need it. Like 3 months is too long, maybe. And even a rolling thing where you have access to some of it at any time, you don't know that, you're not sure if you don't necessarily need access to all of it quickly or most of it, next week. That could happen because things change so quickly, and in some certain businesses anyway. Certain ones they don't, for sure.
But you could sell at any time. Like you're gonna either make a little bit of money or lose a little bit of money. So if the interest rates go up and you bought and the interest rates were slightly lower, 2 weeks ago, then you're going to lose a sliver. And if the opposite happens, then you're going to gain a sliver.
Well, if that's the case, why isn't everyone already doing that?
Well, I think inertia is a big part of it. I think people do what they've always done. And that's why currently there's this massive outflow of depositor money from all of these sort of smaller to mid-sized banks around the US. And it's an issue. And that's part of what's causing these problems with banks like First Republic. Is basically behavior is changing. So it's sort of like, oh, hey, wait, all along, I shouldn't have been keeping my money in this, deposit in this savings account that's paying me 1% or less. I can just funnel it somewhere else to one of these other accounts and I can make a, 4 or 5%.
I can think of really good reasons why you wouldn't want to why you'd rather have it in a crypto account. A crypto account is a weird way to call it. Like in your crypto wallet than like in treasuries. One is you can make more yield if that's your jazz, if that does it for you. 2, although you could sell it and have access to it, you're sort of doing it on their calendar, right? Like how many hours in the day can you sell your treasuries and get cash immediately in hand? Can you do it at 1 a.m.? Can you do it on a Saturday? I know Silicon Valley Bank went down because it was 4 o'clock and the computer shut down at 4 o'clock and they needed the money right then and they couldn't get it till 9 a.m. the next morning. And they really went bust because they couldn't get it. They had to have it by 5 o'clock that night and they couldn't get it because the computer shut down and everyone went home. Like, guess what? In the crypto world, everything always runs. There's no waiting. You don't have to wait for anyone else because it's not centralized.
I mean, that's cool.
There's value there.
That there is value.
There's liquidity there.
But like if I'm a startup with $5 million and for some reason I want 2 million at 2:30 in the morning, yes, crypto offers me a value in that case. But I think that a lot of those companies, they've survived for however many years as companies without having that ability to transfer huge amounts of funds when the bank is closed. So for most of them, it's not a game changer, is what I'm saying.
Okay, I think that's true for some businesses for sure. But a lot of businesses are basically in the paper market, right? Where they're essentially every day borrowing or lending money to other businesses. Like it's like who's got money this week, or today, and then you figure out there's money markets happening all the time, but they shut down at certain times, and the velocity of that money gets slowed tremendously, and you don't need to do any of that in the crypto market. I guess ultimately I'm saying that you're saying, oh, it's better, but who cares? I don't know if people really care. They've been doing it this other way for so long. And I'd be like, cool. canoeing was great, but the outboard motor is better. And even if canoeing worked fine, the outboard motor is better. Some people will prefer an outboard motor. Maybe not everyone.
Okay.
But I'm saying these things are. I'm not saying it's going to mean this stuff means crypto is going to go crazy, but it's going to make it more attractive to some parties that it isn't as attractive. It wasn't as attractive to before. So it should increase the value of it to some people.
The real downside to this outboard motor is volatility and a lack of sort of a proven track record like people will have with like something like, for example, treasury bonds. So treasury bonds is considered one of the safest investments in the world. Now, currently, you're getting yield that you haven't gotten for a couple of decades. You can get close to 5%. And so you talked about, well, in the stablecoin world, you could get more yield if that's your thing. But I do feel like in the crypto world and crypto environment, there's been this high yield sort of possibilities that is uncoupled in people's mind from additional risk, where they're just like, no, it's just, you can get 19% doing this, It's like, oh, well, how the hell can that be without significant additional risk? And most people's answer that I heard, going back a year ago was, because of this, and this, there's all these good reasons why it's not a super risky investment. And when you're getting those outsized returns.
I agree with you that it is easy to brush aside risk in the face of exciting yield percentages. And I think people do that. I've certainly done that many times, for sure. But that doesn't mean to say that everything is as risky as everything else is. And if you can get 4% in treasury bonds, if you get 7% or 8%, which you can do very, very straightforwardly in the crypto world, for example, I think, and I would argue very safely. Now, you might say it can't be safe because it's crypto, but I would say that's just you painting everything with the same brush. Like, well, I'm in this neighborhood and that guy mugged someone once, so everyone in this neighborhood's dangerous. You could be a racist, Sean. I can't have that, man.
Okay, so people who are concerned about risk in the crypto world are like racists. All right, I get it.
Yeah, basically.
I see where your argument has gone. Walk me through it real briefly, because then we're going to talk a little bit about Ponzi schemes. But walk me through how you can get a nearly risk-free 7% in the crypto world currently.
Okay. All right. I know I've tried doing this with you before, and it never ends well. But I will try. I will try again. Okay. So the way it works is, first of all, you participate generally in either a money market or a liquidity pool. Okay. So either you're providing liquidity to a marketplace, or you're actually literally providing, it's not liquidity, but you're sort of a creditor in a money market. Okay. So that'd be step one in either case. You get paid some of the fees that the application or protocol gets for, doing marketplace transactions, be it lending money or exchanges or whatever it might be. They take a piece of everything. You, as a liquidity provider or a creditor, you get a piece of that action, right? They pay you some piece to do that. That's an incentive, right, for you to partake, right? And that alone is usually not going to be enough to get you to 8%. Like, I agree with this, right? That depends on the situation and certain things, but mostly that's going to be less than 8%. But what these protocols do as a way to incentivize you to use them and not someone else, there's two things. One is sometimes they themselves are incentivized to be on a particular blockchain. Like, there's a new blockchain, not really new, but one that recently sort of opened up a lot called Arbitrum, which is a layer 2 Ethereum blockchain. Meaning you can do Ethereum transactions on it much cheaper and faster than you can on Ethereum. Something that costs $5 on Ethereum costs 10 cents on Arbitrum. And it's quicker too. It's nice. So then to get a bunch of protocols onto Arbitrum, what they did is they have their own coin called Arbitrum. And that's worth like $1.35 each, right? And they say, hey, protocol, come here. We'll give you 1 million Arbitrum coins or 10 million Arbitrum coins if you come here and do this much volume. And the protocol says, great, like Aave will say, great. And they go and set up shop on Arbitrum. And they then make those as rewards to the users, right? To the creditors, to the lenders. So instead of me just getting what the normal protocol rewards would be, which might be like 1% or 1.5% for lending, 2%, whatever it is, I get that in addition to this other secondary incentivized piece. like, for example, the Arbitrum reward, where I get an extra 3% or 4% in Arbitrum paid out every 10 seconds or something like that, whatever it is, 4% APY to be clear, not 4% every 10 seconds. So that way it gooses the overall return and then gets us up to that 8%, that mythical 8% that I just sort of threw out there. There's numbers all over the place, really. That's one way. The other way it happens is Aave has their own coin, which they also do, by the way, the Aave coin. And the Aave coin, if you hold it, gives you governance abilities, meaning you get to vote on what happens with Aave because it's decentralized. So you're a shareholder in Aave and you decide, like just whoever owns everyone who owns coins gets to vote. And also you get a piece of the Aave profits overall. So one piece goes to the people who are like the creditors for Aave, and then another piece goes to the holders of the Aave coin, right? So then Aave prints up a whole bunch of those. In the beginning, they have their own limited supply, but they make, 1 billion of them to start with. And they say, all right, we're going to take 200 million of these Aave coins. We're going to give them to all the founders. Take another 300 million though. We're going to use that as a marketing play. And we're going to make this also an incentivization tactic. So that way people who come and lend money on Aave or even borrow money on Aave get Aave coin on top of whatever else is going on. So there was a point with Aave where I could literally go, I would put up a Bitcoin on there and they'd give me, 2% of, yearly for the Bitcoin. Plus I'd also get an additional 2.5% in Aave coin. And then I would borrow against the Bitcoin. I could borrow whatever, $20,000 against the Bitcoin, let's say. And I have to pay them 4%, let's say a year on that. I'm making that up, but it's something like that. And then, but I'm also getting 5% in the Aave coin. So it actually paying me to borrow money for at least a little while. That really was happening. So it was an incredible spot, really, where, you could lend, borrow against the lend, relend, borrow again against it, and like loop it and get all these rewards. And that's a thing that happens. So that's my not brief explanation that probably wasn't satisfying anyway.
Okay, so our younger viewers won't be able to relate to this. And it's not that I couldn't understand anything of what you said, because I did understand some of it. But
cool.
in the Charlie Brown cartoons, anytime there was an adult speaking or a teacher speaking, it would just kind of go to this muffled
oh no, really?
Where you were just hearing noises come in, but you were like, what the hell is he talking about? And so the parts that I did understand, it sounds to some degree like it's just like this financial engineering of like, we're going to create a billion coins and we're going to call them something really cool. And we're going to use these billion Aave coins to do something with a protocol. And anybody who joins us, we're going to take 200 million of these coins and give them out as rewards. And now we've just created this out of thin air.
It's not thin air. Think of it just like it's like a share of Aave. Just like when a company goes public, they create out of thin air shares to sell to the public. It's the same idea. Whoever owns the Aave coins has control of Aave. So it's like owning shares in Aave. Think of it that way.
So is it? But I would argue that it's more like owning shares in a speculative company that doesn't exist. It's just an idea. It hasn't provided any earnings. Like so. For example, let's just say, for example, if there's a new company that's going public that has a track record over the last 10 years of growth and of income, and where they're saying like, so we're saying our value when we're going on the market is, for example, when Google went public, we're going to say that we are worth, I'm making this up, 25 times our earnings because we're in such a growth trajectory, or 35 times our earnings because, we're a super high growth company. And so our earnings are $100 million. We're worth 35 times that. We're worth $3.5 billion. Obviously Google was worth a lot more. And so that is how like people make up how much a company's worth. They're basically buying into the future projected earnings of that company. Now, there's other stocks, not just crypto, like things like SPACs that are these speculative investments where it's like, oh, we don't have any earnings whatsoever, but here's what we're going to do. We're going to go to Mars in 30 years, and here's the scientists we have on board with this, and here's the whole plan of action we have for that. And we think our company is worth $30 billion, and you can get in right now. And there'll be a whole lot of people who will invest in that. Super crazy speculative. And in that case, I agree with you. It's just like what you're talking about, even though I don't totally understand what you're talking about.
It's not at all.
We just create value out of like an idea, thin air.
the thing is this: you just assume that Aave is an imaginary thing where nothing's happening on because you don't interact with it, right? Because it's not in your world. And I understand this is the way most people view crypto. It's not unique to you by any means, right? You are a good proxy for the common man, for the lowest common denominator. But like Aave, I just looked it up. Aave has $5.15 billion locked on it, meaning like that people have lent to Aave and then it has then lent out, right? Aave generates fees from its lending because it lends out at interest rates, and it does it. It's an algorithm, so it does it. It's guaranteed to make money. It's making money. That money then goes to the holders of the Aave coin. It is not an imaginary thing. It is an actual thing. If you have the Aave coin and you stake it with Aave, you get money. You get paid to do that. Actual money, human money to do that, right? So it's not just this idea like Fred Flintstone drew up a spaceship and it's like, one day, Barney, I swear to God, one day. It's not like that. It's like right now we can go down to the Dino factory in our car made of, square stone wheels and like work there, man. Like it's already in existence, this stuff. I understand though it sounds like a wild thing, but I'm not talking speculatively. This actually is happening right now and has been happening for years. Aave's been around since like 2019, which I guess doesn't sound like a long time, but if you think of it like Ethereum was created in like 2015 and DeFi was created like in 2018, being around since 2019 is a long time. And it is the number one lender in all of DeFi. Like I said, it's got $5.15 billion locked in it. It's a big fucking deal. And it just because it's outside your understanding, because you haven't experienced it, doesn't mean it doesn't exist. And it doesn't make it imaginary just because you haven't seen it. You know what I mean? Like I haven't seen a llama. Actually, I have. I haven't seen a kangaroo, but I still think they exist. I mean, I've seen pictures and video, actually.
Okay.
So maybe I have seen it.
I see your point, and
Cool.
I have more to learn about Aave. I'm skeptical that it's actually worth a significant, that it's worth the anywhere near the valuation that it's currently at. But I could be wrong. I've got
That's
more
fair.
to learn there. This might be a nice.
It's fair to say that.
This might be a nice transition into our topic of the day, which is Ponzi scheme. And anytime I read an article about crypto in the Wall Street Journal or any other major publication, and I go to the comments section, I feel like 75, 80% of the comments actually reference like this whole thing is a Ponzi and, these people are idiots and it's going to go to zero and everyone's going to lose their money and like Ponzi. So let's take a moment to define what a Ponzi scheme is and then to discuss whether actually Bitcoin, Ethereum, and some of these other coins share some of the qualities crypto people who are investing in it. Is it like they're investing in a Ponzi scheme?
Cool. Let's do it.
All right. So I might pull up.
Great. I don't have the definition in front of me, but I could talk about it if you don't have it in front of you either.
So we've got Ponzi scheme is basically you've got a schemer and you've got
a Ponzi. That's it. That's the whole thing.
Exactly. So there's an emphasis on recruiting. There's no genuine product or service. Promises of a high return in a short time of period. Promises of easy money or passive income. No demonstrated revenue from retail sales. A complex commission structure is often involved. And I mean, obviously this started with Charles Ponzi. That was his name, right? And he was basically,
I think so.
He was just an incredible salesman, right? So he was great at marketing. And
it's a fraudulent investment, right? Where you basically pay the early investors with newer investors' money. That's what a Ponzi scheme really is.
Bernie Madoff would probably be the biggest Ponzi name in the kind of modern era from whenever he got caught like 10 years ago.
Cool.
So and he was able to sustain it for so long because he would continue to have new investors and a lot of people would keep their investment with him. It wasn't like he was paying them the 50% returns or I think he was saying it was at 10 or 12% returns every single year. So he was beating the market consistently. But a lot of people would just keep their money with him over 10, 15 years. Sure. And so he could just keep the whole thing riding along. It was only when the financial crisis happened that everybody tried to pull out their money that then they learned actually it's not there because he's been living large with your money and he's actually not invested any of it.
It sucks to have to trust people, man.
Yeah.
It really sucks.
So once and for all, is Bitcoin a Ponzi scheme?
In no way is Bitcoin a Ponzi scheme. There is essentially no characteristics of a Ponzi scheme that are in the Bitcoin world, that are in Bitcoin. There's like zero. It's decentralized. Like for a Ponzi scheme, you need a central figure. It has to be centralized. They keep all the money. They hide all the information from everyone, right? It's a fraudulent investment that they're lying about that doesn't exist. None of that's true with Bitcoin. You could argue that you don't think Bitcoin has value. That's fair. But that's different than arguing that Bitcoin doesn't exist, right? And other people clearly do think Bitcoin has value, right? And so there's a disagreement about that right now. That's fine. And that's why the price moves around to whatever degree it moves around. But no, there's nothing fraudulent about Bitcoin in that way at all. You could argue it's a bad investment. You could argue it's overpriced. You could say it's speculative. You could say it's going to zero. We can argue about that separately. But that's different than it being a fraudulent investment. And by the way, there's no way the old users are getting paid out by money from new investors. I mean, I guess if you say like, well, when you sell an investment, that's the new investor and the old investor made money. But that's true literally for every investment in the world. That's not part of the Ponzi scheme, right? It's when someone is lying about where the money's coming from, right? They didn't generate it from any kind of investment strategy. They just they lied to someone, took it from them and gave it to you and lied to you about where it came from. That's a completely different thing. None of that's happening with Bitcoin or Ethereum, by the way, at all.
So what you're saying makes sense. Why do you think it is that so many people, their just knee-jerk reaction is this whole thing is a Ponzi scheme?
Great question. Number one, I think a lot of people do not understand what the fuck any of this stuff is. It doesn't really make any sense to them. And so it's easy to just paint it with that and move on with their lives. Huh. That's one answer. Number two, I don't know, but like, it's not impossible that like the comment sections are actually not really all real people. Like on Twitter, on Reddit, a lot of those things are not actual people anymore. You know, like Facebook, like I'm not talking about for Ponzi and Bitcoin. I mean, just in general, you know, all the disinformation and stuff. There are many entities that really would profit from a lot of people not trusting Bitcoin and not believing it and thinking and being able to dismiss it easily. And it would be relatively inexpensive to create, you know, to do something like this in the grand scheme of things for these bigger entities. I'm not saying that's what's going on. I'm not a big conspiracy guy, really. But that isn't crazy or insane to me either. That could at least be possible, at least to some degree. I'm not saying that would be all of it by any means. I know normal people also say this. Yeah. But that has an impact on why normal people say it, I think. Because if you look at every single comment section that it all says Ponzi, it's easy to say, oh, it's probably a Ponzi. Right.
That's interesting. I never even considered that. Can I throw in another possibility, which is that people confuse Ponzi scheme with the greater fool theory, where they just are sort of confusing it with like, actually, the only reason why Bitcoin is worth 28 grand is because new people come in who believe in this get rich quick scheme and they're willing to pay 28 grand. And then a few new people walk in through the door and they want to pay 29 grand because they're buying into this get rich quick scheme too. And none of it really has any value. So these are just foolish investors. And maybe there is a few people who are whales in the background who are kind of manipulating the market, which we know was going on with some of the, you know, with FTX, for example. And so that they're sort of just like drumming up business and drumming up the market so that people pay these higher prices and then the whales sell and it settles back and they buy in again and they repeat the whole thing. So they're just kind of milking the little man.
I mean, we could argue about the greater fool theory stuff if we want to. The thing is this, like I know we're going to eventually talk, not today, but we're going to eventually talk about Bitcoin and the environment and energy and all that too. I know we are, right? Yeah. That's coming. And underneath all this stuff, really the subtext for a lot of your arguments, I think, is the idea that Bitcoin doesn't actually have any value. Right? Because if it had value, then it'd be fine that someone would be maybe interested in paying more, right? It'd be fine that someone thinks Aave is good. It'd be fine, blah, 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 all these things, right? But since it doesn't have value, all these things, then why would you, if it doesn't have value, I would agree with you, right? I think it has value and other people do too, though, right? I'm not the only one. I'm one of millions of people millions upon millions of people who think it has value, right? And we may have our different reasons for it. We may ultimately be proven right or proven wrong. But it's been a long time. It's been 14 years of this. Like in the old days, they used to compare it to tulip mania, which happened in the Netherlands in like the 1600s or something. It was a long time ago, 1800s. I don't know. But tulip mania lasted like 4.5 months. It was like a very short-lived thing because of course it was, because it was absurd. This is a different thing entirely, right? And actually, while we see the legacy financial systems around us burn to the ground, slowly but surely, we can see the smoke coming out of the buildings, man, of all the banks. We can see it happening in slow motion in front of us as bank after bank fails. That's right. I'm going there.
Bit of hyperbole.
All right, I'm overstating it. I'm overstating it a little bit. But like, it isn't like the legacy financial system is doing amazing, right? We just came out of, in America anyway, runaway inflation. Absolutely. By the way, not just in America, really, in the industrialized world, right? Runaway inflation. We're still like, it's only 6.8% this month, year over year. We're so excited, okay, like that ain't that good either, guys. Remember, you used to go for 2% all the time. 2% was the number everyone was going for. You're so far away from that. So like, I'm not saying there's even good solutions to these problems for these legacy networks at this point, for like the governments and the Fed and the European Union and all that. I don't know if there are. Like, it may be sort of like we have runaway inflation or everything fails, and it's very hard to find a good balance between that at this point because of the way we set it all up. But I don't understand why that means that Bitcoin would have no value. Like, I would say that Bitcoin was born out of this stuff, right? It was born out of the 2008 financial crisis because Satoshi thought we could use something that had a truly limited supply, where the ledger was clean and we could see where everything was and where everything went. No one could counterfeit it. You could trust it. You could hold it yourself, so you didn't have to count on these institutions not to fuck you over, which, as Bernie Madoff did, as FTX did, as numerous other financial entities have in the past and will again in the future, right? That's the idea of Bitcoin. And by the way, you can also send it faster and better, and it's more portable, it's indestructible, it's uncounterfeitable. It's great in all these ways that many other stores of value aren't. The question was, would people ultimately agree that it's a store of value? That was the question then. It's still really an open question. We're just getting closer to yes than we were. We're moving towards yes. Doesn't mean we're going to get there, but we're moving towards that.
I mean, I think there's aspects of Bitcoin that are valuable. That to me, when I hear about them, have value. The whole thing that you can control your own money and you don't have to have it a third party who is taking care of it for you, who you depend upon. The whole thing about being able to, transfer money after the close of business hours, should you wish to do so. The whole thing about being able to send money internationally, like just instantly and on your terms. There's a lot of aspects of it that actually seem like quite appealing. I think that it's just oversold as far as the speculative piece of it. And I think sometimes people talk things up in this hyperbolic way where it's just not grounded in sort of good sense, my viewpoint.
We did sort of get a little away from the Ponzi scheme thing to get into like, does Bitcoin have value?
Yeah.
I think in the end, like, we're going to find out together. We're all going to find out, where this ends up. And if it ends up being digital gold for real, we'll know. We're going to know pretty soon if it's going to be digital gold or not. I would say this. Young people aren't buying gold, man. They're not storing their money in gold. They're storing their money in Bitcoin if they're picking an alternate investment. It's not the only places, of course, but like for the people who might have bought gold in the past, the younger people are not buying gold. They're not interested in that. They're interested in Bitcoin because they understand digital ownership in ways that older people don't.
Can I ask you something?
People like you. Yeah.
Wouldn't you say, though, that just the storyline shifts over time, depending upon the narrative shifts around Bitcoin, depending upon sort of like what they can get away with in the moment? Like, so initially it was going to be this digital currency that was just, it was so much better than it was better than cash, it was better than credit cards. And it's like, it isn't better than those things because,
well, I mean,
Okay, it just seems like,
kind of.
at least as it was sort of developing, that it was like it took too long, it was too slow, the network wasn't working, the fees were too high. It was just like all of it was not seamless like you would hope that it would be if it was a digital currency, you know? So then it was like, okay, that's no longer the narrative about why Bitcoin's valuable. Now it's valuable because it's digital gold. So how am I supposed to trust in that? And is that narrative going to be sustained, or is that going to fade? And what's going to be the next narrative if that sort of doesn't sustain?
Dude, most investment is memes, right? Most investment is the story that's being told. So many things pivot their narrative. Bitcoin actually right now, again, could be used really well for payments. It has the Lightning Network, which basically makes it free to send Bitcoin instantaneously, anyone to anyone, anywhere. Like, that's built. So it used to be, like you're saying, though, the payments thing was what it was originally done as, and it was not good for that. You are correct. Then a bunch of other cryptos came up, though, that were good for that. Many payment coins came up, and stable coins came up, and all these things work really well with that. So that's another solution to that problem, and Bitcoin doesn't need to solve that problem. We'll see if it does anyway or not. I don't think it will, but we'll see. And in the end, it's just the network effect. Right? Like, what does everyone think? And if people decide it's a store of value, if enough people decide that, then it is. That's it. That's all it takes, right? Is people agreeing that it's a store of value. You don't have to get a seal of approval, right? It's just, that's how it works. There was I don't think it was Easter Island. There was some island somewhere which had like 6 big statues on it, right? And that was how the island had their wealth. Was they knew who owned the different set. They're huge, like way bigger than a person, these statues. You can't move them, right? They're just there. But everyone knew who owned the 6 different ones. The 6 people who owned them, those were the rich people. They weren't rich because they had other things. They were rich because everyone knew they owned those things. Even though those things themselves, the big statues, had no intrinsic value. You couldn't do anything with them, right? They got you nothing, but everyone knew who owned them, and those are the rich people. And if you wanted to, if you were the owner of that and you had nothing else, you could trade that. Even though it just stood there, much like the Mona Lisa in the Louvre, just stays there anyway. You could trade that for a house and cars and money and all these other things, and that was fine. And in fact, there was a 7th statue that was supposed to also be there, but that had was so heavy it sunk the boat it was in and was at the bottom of the ocean. But everyone knew it was there, and they knew who owned that one too, and that person was also rich.
It's amazing.
Because it's all just what we all agree on in the end, right? Like, you take $100 bill and a $1 bill, they intrinsically are the same, right? They're made of the same stuff. They weigh the same amount. They have the same physical actions. The only thing that's different is we've agreed that the thing with this other number on it gets me more than the thing with this number on it. Now, there's reasons why we've agreed to that. I know. Like, the U.S. government says you can pay your taxes this way, and we'll accept it, and it all fits together well. But ultimately, we've just agreed that that's that it's worth something or it isn't, right? And this is one of the problems with money and fiat currencies in general is things can spiral out of control, especially when inflation starts to happen. Look at Venezuela, where if you want to buy a cup of coffee now in Venezuela, you need basically a wheelbarrow full of money to buy a cup of coffee because inflation's gone so crazy.
So that's we're just scratching the surface here. We've got much further to go. So if that's the case, though, and I'll end with this, if it's just about the narrative and the belief, then what Bitcoin has going for it is the network effects, because it's just as likely that something else could have that narrative and have that belief and switch over. And so your $1 trillion market cap could fizzle away while something else becomes that store of value in the digital world in the future.
It's possible. It's possible. Bitcoin is way ahead of everything else. And in the history of the world, new things that have gone digital that hit $1 trillion market cap always win. Now, it doesn't mean this one's going to also, but literally it's never not happened so far. So we'll see. But you're right. Something else could beat it as a digital store of value. But the fact that you even agree that there's going to be a digital store of value feels like, okay, so if it's not Bitcoin, pick the one that it is. And now I feels like you're kind of on my side now a little bit, right?
Hey, we're making progress.
Yes.
All right. We'll see you next time.